When was the last time you scrambled to find a receipt or missed a tax deduction because the right document wasn't at hand? Imagine Sarah, a small business owner, who spent hours every month hunting down receipts until she discovered a simple system that changed everything. These frustrating moments aren't just annoying, they're costing you real money. Data show small businesses lose an average of $200 annually from missed deductions. Over the next 10 minutes, I'll show you a practical, step-by-step framework to fix this so you can save time, avoid penalties, and take control of your bookkeeping. What if I told you the average small business loses $1,200 per year just from missed deductions? This isn't hypothetical. It's the direct result of disorganized bookkeeping that many business owners don't recognize until it's too late. Most entrepreneurs believe their systems work fine until tax season arrives and the chaos begins. By then, the damage is already done. When disorganization disrupts tax season, it doesn't only trigger penalties, it also drags down everyday productivity. Data reveals that 40% of small businesses face penalties due to incomplete records, with average penalties costing $900 per incident. These numbers represent real financial losses. Imagine a landscaper who lost $3,500 in legitimate equipment write-offs. His receipts were valid, but because they were mixed with personal purchases in old shoeboxes, he couldn't substantiate them during an audit. That deduction disappeared, along with his chance to reinvest those funds. Disorganized records are like a cluttered toolbox. When you can't find the right tool, every task takes longer. Proper record keeping improves operational efficiency by 35%. Think about how much time you currently spend searching for invoices or recreating lost financial records. That time adds up, not just in hours, but in missed opportunities and unnecessary stress. Digital storage isn't automatically the solution. Data indicates 62% of cloud storage users still struggle with document disorganization. Dumping files into generic folders like receipts or vendor invoices creates the same problems as physical clutter, just in digital form. The answer isn't more folders, it's smarter categorization. A landscaper doesn't need separate folders for every rake and shovel purchase, but clear categories like equipment purchases or job materials make all the difference. Proper organization recovers an average 4.2 hours per month that would otherwise be spent searching for documents or recreating lost information. For a business owner billing $75 an hour, that's $315 monthly, nearly $3,800 annually, just from having files where they belong. But fixing document organization alone isn't enough. The right tools can turn record keeping from a chore into a competitive advantage. Efficiency compounds over time, and reclaiming even 1 hour weekly can transform how you run your business. Systems matter because time matters. Why do so many small businesses struggle with accounting software? The problem often lies in the mismatch between what these platforms offer and what business owners actually need. According to research, 73% of accounting software features go unused, meaning businesses waste 82 cents of every dollar spent on these tools. Platforms like QuickBooks and Xero promise extensive automation, but their complex dashboards overwhelm users who just want to track income and expenses. Dozens of menus and reporting options remain untouched, leaving small operations paying for features they'll never use. Imagine paying every month for bells and whistles that never ring. This is the real cost of overcomplicated software. Take the case of a bakery owner spending $50 monthly on QuickBooks Online. She only needed basic invoicing and expense tracking, but was constantly bombarded with alerts about unused inventory management and payroll features. Over a year, that's $600 wasted on tools she didn't need, adding frustration to her already busy schedule. This scenario is all too common. Many small business owners buy software designed for larger operations, only to find themselves lost in irrelevant tools while missing the core functions they actually require. A lean, well-tailored software solution is like a custom-fitted suit. It enhances your efficiency rather than weighing you down. The key is choosing software that aligns with your current needs and foreseeable growth. A service business with consistent expenses requires different tools than a retail operation managing inventory. Proper software selection can reduce bookkeeping time by 58% on average, transforming financial management into a streamlined process. Upfront research, like testing free trials, ensures the platform fits your workflow. The bakery owner who switched to simpler software reclaimed 4 hours monthly, while a landscaper using industry-specific tools cut his bookkeeping time by 75%. The right choice saves time, money, and frustration. How would you prove $23,000 in cash expenses during an audit tomorrow? This isn't a hypothetical scenario. 1 in 7 small businesses face audits, and cash transactions over $10,000 frequently trigger them. CPA's findings show 89% of audited businesses lack proper documentation for at least one major expense. That missing proof can turn valid deductions into disallowed claims, costing thousands in additional taxes and penalties. Consistent logging and reconciliation are the keys to avoiding this. Or the restaurant owner who caught a $500 misclassification during weekly reconciliations, saving hours of guesswork later. Then there's the landscaper who combined app data with handwritten notes to substantiate $18,000 in vehicle expenses. These examples highlight the same issue. Without consistent, detailed records, legitimate expenses can be challenged or disallowed. The solution? A system that ensures every transaction is documented and categorized in real time. Reconciliation is the heart of audit proofing, but a balanced approach to digital and physical backups is the safety net that protects your business. Research shows businesses performing regular reconciliations reduce audit risk by 42%. Think of the 3-step reconciliation method as a well-oiled machine. Weekly transaction reviews catch errors early, monthly categorization checks ensure expenses are in the right accounts, and quarterly documentation audits verify that every deduction over $75 has supporting records. This system not only simplifies audits, but also prevents breakdowns in financial management. Digital records, while efficient, come with risks. Our data reveals 37% of digital-only businesses encounter corrupted or misplaced files. A contractor lost 3 years of invoices when his software provider shut down without export options. Physical backups, like printed receipts or external hard drives, are essential safeguards. The IRD accepts scanned receipts, but requires they be legible, organized, and accessible for at least 7 years. Audit proofing isn't just about compliance, it's a strategic advantage. Clean books streamline tax filing, secure loans, and reveal insights like over-ordering or fraud. With consistent systems, tax season becomes a straightforward process, where every number has a clear paper trail. Data show businesses using these bookkeeping systems experience 23% fewer financial emergencies. The landscaper rebuilding his deduction system recovered $3,500 annually, and the bakery owner saved 48 work hours yearly by switching software. These successes highlight the power of organized finances. Our free document retention checklist provides the framework clients use to manage receipts, categorize expenses, and schedule reconciliations. Consistent records turn potential deductions into real savings. Download it today and take control of your financial future. Every organized receipt today is a safeguard for your business tomorrow. Start now. The next tax deadline is closer than you think.